Good day, YouTube. This is Jay Money with Falling Forward Financial. Just a video here on two stocks under $20 that could double your money. So it's actually any stock could double your money, and you could also lose some money on some stocks. But that's just the game you play with the stock market. But again, this is two under $20. So while risk is always involved, just like I said when investing in stocks, and again, I don't give tax, legal, or trading advice, just stating my opinion going over the article. Some equities are riskier than others. For instance, small cap companies, that is those with market caps between $300 million and $2 billion, tend to carry above average risk. However, these companies can also offer substantial upside in a relatively short period and perhaps even turn into solid long-term investments. Let's take a look at two small cap companies that could double your money within the next couple of years and deliver solid returns in the long run. And if they can navigate the road ahead, BIOXCELTHERAPEUTIcs, ticker BTAI, and Planet 13 Holdings. I've talked about Planet 13 a couple times here on the channel. They're actually down quite a bit right now, so if you're looking to get in, not that I give tax, legal, or trading advice, it's a good time to look at Planet 13. I'm considering buying some more of it myself. One account, I have a cost basis of $1.80. I think it ran up to $6 or $7, and but it's actually down. So, but the first one is BIOXCELTHERAPEUTIcs, again, ticker BTAI. If you have either one of these, go ahead and leave that in the comments. But BIOXCELTHERAPEUTIcs focuses on developing innovative therapies in neuroscience and immuno-oncology. Biotech currently boasts a market capitalization of $379 million, so relatively small, and a share price of $11.75. However, the valuation hardly reflects the potential of the company and its most important product, ILGALMI. I think that's how you say it. That's how I'm going to say it. It's a sublingual film for treating acute agitation, psychological and behavioral symptoms typically characterized by anxiety and intense activity. So this one would be something to look at. Sublingual is underneath the tongue. For those of you that don't know what sublingual means, no offense, but there's tons of psychological and behavioral symptoms, especially since March of 2020, as well as anxiety as well. But those exist even outside of a pandemic or anything else. That's just the day and age we live in, and that's just how some people are wired. So associated with schizophrenia and bipolar disorder. So this would definitely be one to consider. ILGALMI ran into regulatory headwinds last year, which is the major reason BIOXCELTHERAPEUTICS shares have declined sharply recently. The company stock is down 62% in the past year. The FDA finally granted the therapy approval in April. ILGALMI's launch should be underway. BioXcel estimates that the 7.3 million schizophrenia and bipolar disorder patients in the United States who suffer from up to 25 million agitation episodes annually. Currently, standards of care are a type of agitation are inadequate, making ILGALMI a potentially welcome option for healthcare professionals. If the therapy can capture even 1% of the patient population, roughly 73,000 people, its revenue potential could far outweigh BioXcel's current market cap. So with some of these biopharmaceutical, if that's what you want to call this one, a lot of those I stay away from. They're just too up and down, but sometimes you can make money on some of these, so maybe it would be worth just grabbing a couple shares just to see what happens. That's kind of what I do sometimes, and then just kind of go from there. But also associated with Alzheimer's disease and as an adjunctive treatment for major depressive disorder. All kinds of depression going on. Again, that's just how some people are wired. If the therapy is approved in both indications, it would add thousands of potential patients to BioXCELTHerapeutics' target market. Again, BioXCELTHerapeutics also has a couple of other pipeline candidates in immuno-oncology undergoing early-stage studies. None of the news seems to have helped the stock much. The shares are trading near a 52-week low and some 70% off their high. Geopolitical and economic tensions seem to be weighing on the stock, especially given the BioXCELTHerapeutics still generates no revenue and is consistently unprofitable. And of course, investors also have in mind the typical issues biotech companies face, including potential clinical and regulatory setbacks. Still, in my view, the market is undervaluing the company's potential. Investors should remain cautious and interested. One should start by opening a small position and with a plan to progressively add more shares to BioXCELTHerapeutics. Assuming it does, but if all goes well, the company stock should skyrocket in the next 2 years. So, again, just like I said, if you're looking to get into this one, I wouldn't dump hundreds of dollars into it. I mean, it's up to you, but sometimes I just might buy 5-10 shares and just kind of see how that goes. And if it dips, not a major loss, maybe buy some more. If it goes up, it's all good. So, next is Planet 13. I'm kind of depressed it was down so much, but again, it's tempting me to buy some more. It did run up to the $6 range, and I have no doubt in my mind it's not going to run up, or it is going to run up like that again. It just might not happen this year, but maybe after elections and get through all of that stuff, so and get rid of the current administration, so maybe it'll run back up. But so it has also lagged in the last 12 months, like I said, in part due to the impact of the pandemic of the business. So should have dumped this one a year ago and rebought back in. Probably could have doubled or tripled my shares and then some. But they're down 77%. The trailing 12-month period, it currently trades at about $1.47, making it a penny stock with the risk that it entails. And of course, it's still over the counter. Revenues growth rates have declined substantially in the in the recent quarters, and the company isn't consistently profitable. First quarter, Planet 13 top line increased 8% year over year to $25.7 million. Net loss for the quarter came in at $2.1 million, but that was better than the $6 million net loss it reported in the year ago period. Investors should not ignore Planet 13 regular net losses and slowing at a time when the foot traffic in some of its brick and mortar stores continues to be impacted by the outbreak. Given its market cap of $315 million, the company's shares have fallen. That was probably, I'd have to do the math, if it would hit $1 billion when it was at as high as $6-7. I'd have to figure that out, but for another time. So again, fallen low enough that even with the problems it faces, it may be worth investing in at the current levels. After all, it's building a brand based on a unique business model among its peers in the MJ industry. The company's claim to fame is its superstore located in the famous Las Vegas Strip. Like I said, I've made a couple videos about this one. Just a huge store. I call this one the Walmart of MJ, if you will. It's just a big store. So, but Planet 13's production process and enjoy various of other activities, including a restaurant, coffee shop, and purchasing various MJ-themed souvenirs. While the pandemic decreased the superstore's foot traffic, this strategy was working successfully beforehand, and it will likely be a success again as the crowds return to Las Vegas. That's because, as the company notes, 74% of the Americans prioritize experiences over products, according to a 2018 survey. That gives Planet 13 Holdings an edge over many of its competitors. It also opened a superstore in Orange County, California, another prime tourist destination. In June of 2021, the company has plans to launch more superstore in various major U.S. cities in the next few years. So that's why I got into it, because they're just going to keep expanding just like all the other MJ companies. And it will raise its operating expenses too, but it's not consistently profitable, which makes it a risky stock to invest in, but could also resort to dilutive forms of financing, putting even more downward pressure on the stock. That said, if the pandemic does evolve into a less intense endemic situation that is largely less impactful on people's behaviors, and this vertically integrated MJ business regains to pre-pandemic health, its stock could more than double from its current levels. And so, if you have either one of those or both of them, you can leave those comments, and those are always appreciated. Again, Planet 13 Holdings trades over the counter, so if you're looking to get this one on Robinhood, you can't buy it on Robinhood. You can buy BIOXCELTHERAPEUTICS on Robinhood, but not Planet 13, as you can see, trades over the counter, so PLNHF. But that is the two stocks under $20 that could double your money. I more than doubled my money on Planet 13, but now it's down, so I wish I would have sold it. But it was double and triple my money, but I should have sold, but didn't. But that's besides the point. But and if there's any other videos you want me to make on any other stocks, feel free to leave that in the comments as well. And if you haven't smashed that like button yet, go ahead and hit that for me, as well as subscribing and hit the bell so you're notified of when the next videos drop. Again, this is J Money, Falling Forward Financial. Happy trading, happy investing, stay green. Cheers.